Are you dreaming of a college education? It's a goal worth striving for. But let's talk about something crucial: student loans. In today's world, getting a degree often comes with a hefty price tag. More and more students are relying on loans to make their dreams a reality. This is leading to a significant increase in student loan debt nationwide. What you need to know is how these loans will affect your life after graduation. We'll uncover the truth about student loan repayment and its impact on your financial future. Together, let's navigate the complexities of student loans and empower you to make informed decisions about your education and your finances. Imagine this. You've just graduated and you're ready to conquer the world. You land your dream job, but then reality sets in. Those student loan bills start arriving, and suddenly, a weight settles on your shoulders. This is the burden of student loan debt. It can impact your financial well-being for years to come. We're not just talking about the monthly payments, although those can be substantial. It's about the missed opportunities, the delayed dreams, and the constant financial stress. This is the reality for millions of graduates. By understanding the potential burden of student loan debt, you can make proactive decisions to minimize its impact. The good news is, you have the power to take control of your financial future. It starts with knowledge. By understanding how student loans work, you can make informed decisions about your education funding. We'll explore practical strategies for managing your loans effectively, from budgeting tips to loan forgiveness programs. With the right information and a proactive approach, you can too. Let's talk about the domino effect of student loan debt. This is how one financial obligation can impact other areas of your life. Picture this: you're finally independent, earning a paycheck. But those student loan payments, they can feel like a major roadblock. Because a big chunk of your income is going towards loan repayment, you have less money available for other essential financial goals. Saving for retirement? It might feel like a distant dream. Building an emergency fund for unexpected expenses? That could be a challenge too. When you're burdened by student loan payments, it can create a ripple effect across your entire financial life. Think about some of the major milestones you envision for your future. Buying your dream home? Starting a family? These are exciting goals, but student loan debt can make them feel further out of reach. Lenders look at your debt-to-income ratio when deciding whether to approve you for a mortgage and at what interest rate. A high debt-to-income ratio, often influenced by student loan debt, can make it harder to qualify for a mortgage or result in less favorable terms. This means you might have to delay buying a home, potentially missing out on years of property appreciation. The burden of student loan debt can make these financial goals feel overwhelming. The financial implications of student loan debt are significant, but let's not overlook the emotional and mental toll it can take. Constantly worrying about money, feeling trapped by debt, and having to make tough financial choices can weigh heavily on your mind. It's important to acknowledge that financial stress can impact your overall well-being. It can lead to anxiety, depression, and even relationship problems. Living with this constant financial pressure can affect your sleep, your job performance, and your overall quality of life. Seek support from loved ones, financial advisors, or mental health professionals if needed. There are resources available to help you manage both the financial and emotional aspects of student loan debt. We often hear about the principal balance of student loans, but what about those hidden costs that can sneak up on you? Yes, we're talking about fees. One common fee is an origination fee. This is a percentage of your loan amount charged by lenders for processing your loan. Another fee to watch out for is a late payment fee. Life happens, and sometimes payments can slip our minds. But be aware that late payments often come with hefty fees that can add up quickly and damage your credit score. It's essential to understand all the fees associated with your specific loans before signing on the dotted line. Read the fine print. Now, let's talk about interest rates. Interest is the cost of borrowing money. With student loans, interest can be a significant factor in how much you ultimately repay. Interest rates on student loans can vary depending on the type of loan, the lender, and your creditworthiness. Generally, federal student loans have lower interest rates compared to private loans. Here's the catch: interest accrues daily on most student loans. This means that every day, a small amount of interest is added to your loan balance. Understanding how interest rates work is crucial to managing your student loan debt effectively. Now let's unravel the mystery of amortization. Amortization is the process of paying off a loan over time with regular payments. Each payment you make is divided into two parts. One part goes towards paying down the principal balance of the loan, and the other part goes towards paying off the accrued interest. In the early years of repayment, a larger portion of your payment goes towards paying off the interest, and a smaller portion goes towards the principal. Understanding amortization can help you make informed decisions about your repayment strategy. Now that we've explored the potential challenges of student loans, let's empower ourselves with practical strategies for managing them effectively. The good news is you have options. Federal student loans typically offer various repayment plans, each designed to fit different financial situations. If your budget is tight, income-driven repayment plans are a lifeline. These plans adjust your monthly payments based on your income and family size, making them more manageable. Contact your loan servicer to discuss your options and choose the plan that aligns best with your financial circumstances. Now let's talk about budgeting, your best friend on this journey to financial freedom. Creating a realistic budget is crucial for managing your student loan payments and achieving your financial goals. Start by tracking your income and expenses. Identify areas where you can cut back on unnecessary spending. Redirect those funds towards extra loan payments. Even small contributions towards your principal balance can make a big difference in the long run. Consider finding ways to increase your income. The key is to be consistent with your budgeting efforts. Before we wrap up, let's explore some alternatives to traditional student loans. If you're still in the planning stages of your education, consider these options to minimize borrowing. Scholarships and grants are free money for your education. Don't leave any opportunity untapped. Search for scholarships based on your academic achievements, field of study, extracurricular activities, or even your heritage. Another avenue to explore is work-study programs. These programs allow you to earn money while studying, reducing your reliance on loans. By exploring these alternatives, you can pave the way for a brighter financial future. Let's talk about credit scores. They play a crucial role in your financial life, especially when it comes to major purchases like buying a home. Your credit score is like a financial report card. A good credit score opens doors to favorable interest rates, loan approvals, and even rental opportunities. Making on-time payments on your student loans helps build a positive credit history. On the other hand, late or missed payments can negatively impact your score. By managing your student loans responsibly, you're not just paying off debt, you're investing in a strong financial foundation. Now, let's connect the dots between student loans and buying a home. When you apply for a mortgage, lenders assess your financial health through a metric called the debt-to-income ratio, or DTI. This ratio compares your monthly debt payments, including student loans, to your gross monthly income. Lenders use this ratio to determine how much of your income is already committed to debt repayment. A lower DTI generally indicates to lenders that you have more room in your budget to handle a mortgage payment. So if you're planning to buy a home in the future, it's essential to be mindful of how your student loan payments factor into your DTI. The good news is that even with student loan debt, you can still achieve your dream of homeownership. It's all about strategic planning and taking proactive steps to strengthen your financial profile. Start by focusing on those on-time payments. Set up automatic payments or reminders to ensure you never miss a due date. Next, explore options to lower your debt-to-income ratio. If possible, make more than the minimum payments on your student loans to pay off your debt faster. Consider refinancing your student loans to potentially secure a lower interest rate. By making consistent, positive financial choices, you can navigate the path to homeownership, even with student loans in the mix. We often hear the advice to follow our passions when choosing a career. It's important to find work that brings you fulfillment, but also be realistic about financial implications. Some career paths, while rewarding, may not offer high starting salaries. Careers in social work, the arts, or education often come with modest incomes. Balancing passion with financial obligations, especially student loans, can be challenging. Some career paths offer higher earning potential. Think finance, technology, or healthcare. These fields can provide financial security to manage student loans and pursue passions outside of work. The key is to find a balance between your interests and financial well-being. If you're passionate about public service and considering a career in government or nonprofit organizations, there's good news. The Public Service Loan Forgiveness, or PSLF program, offers a valuable opportunity for loan forgiveness. This program is designed to encourage individuals to work in public service by offering loan forgiveness after 10 years of qualifying employment. If you make 120 qualifying monthly payments under a qualifying repayment plan while working full-time for a qualifying employer, you could be eligible to have the remaining balance of your federal direct loans forgiven. This program can be a game changer for those dedicated to public service. It allows individuals to pursue their passion for making a difference without the burden of long-term student loan debt. However, it's crucial to understand the program's specific eligibility requirements and to ensure that your loans and employment situation qualify. The PSLF program has undergone some changes in recent years, so it's essential to stay updated on the latest guidelines. Starting your own business or pursuing a side hustle can provide flexibility and high income, beneficial for managing student loans. Entrepreneurship allows you to be your own boss, set your own hours, and align your career with your passions. While it comes with challenges, it offers the opportunity to control your income potential. A successful business can generate significant income, helping you pay off student loans faster. A side hustle can supplement your income and tackle student loans. Freelancing or selling handmade goods can generate extra cash flow for your loans. Remember, your career path doesn't have to be linear. We've covered a lot of ground today, from the rising tide of student loan debt to practical strategies for managing repayment and its impact on your financial future. The key takeaway? Knowledge is power. The more you understand about student loans, the better equipped you'll be to make informed decisions about your education, your finances, and ultimately, your future. Remember, student loans are not inherently bad. They can be a valuable investment in your future, opening doors to higher education and career opportunities. However, it's crucial to approach them with open eyes, understanding both the potential benefits and the responsibilities that come with borrowing money. By arming yourself with knowledge, you can navigate the complexities of student loan repayment and create a solid financial foundation for yourself. Don't let fear or uncertainty hold you back from pursuing your educational aspirations. Managing student loans might seem overwhelming at times, but remember, you don't have to tackle everything at once. Take it one step at a time. Start by understanding your loan terms, interest rates, and repayment options. Create a realistic budget that works for you. Track your spending and identify areas where you can cut back to free up more money for loan payments. Explore options like loan forgiveness programs, refinancing, or income-driven repayment plans to find the best fit for your circumstances. Remember, small, consistent actions over time can make a significant difference. Even if you can only make extra payments occasionally or contribute a small amount towards your principal balance, every little bit counts. Celebrate your milestones along the way. Each payment you make brings you closer to debt freedom, and don't hesitate to seek help or guidance when needed. There are resources available from financial advisors to loan servicers who can provide support and answer your questions. As we conclude, I want to leave you with a message of hope and empowerment. Your future is bright, filled with endless possibilities. Don't let student loans overshadow your dreams or limit your potential. By taking control of your finances, making informed decisions, and staying committed to your goals, you can navigate the path to financial success. Remember, your education is an investment in yourself, an investment that will continue to pay dividends throughout your life. So go out there, pursue your passions, and embrace the journey. You have the power to create the future you envision, a future where financial freedom and fulfillment go hand in hand. Thank you for joining me today. I hope this information has been valuable and empowering. Remember, you've got this.